Hello, I'm Chris Kapches, President of Chestnut Park Real Estate. I'm going to give you an update on the Toronto area real estate market, particularly as it relates to the data that we have from May. I guess it's safe to say that we're seeing three, perhaps four kind of themes emerging in the marketplace. The first one is that the City of Toronto is strengthening, the marketplace is strengthening. I'm going to show you a chart which will demonstrate, in fact, how the market is strengthening. It has been strengthening since the beginning of 2018. The average sale price has continually gone up. It's not quite where it was last year at this time, but it's starting to approach that level. So that's one theme that we're seeing, is strengthening prices in the 416 region. Conversely, we're seeing a weakening in the 905 region. That marketplace was hit by the Ontario Fair Housing Plan, and particularly the 50% foreign buyers tax, and hasn't completely recovered or even begun to recover since those measures were implemented. So what we're seeing is sale values dropping in that community. As I said, conversely to the City of Toronto, where they have been increasing, number of sales are down in that community, and doesn't appear to be any immediate change that's going to take place in that community. So major disparity between the 416 and the 905. The third theme that is emerging is a decline in inventory, and again, particularly in the 416. The bulk of the inventory available currently is in the 905. The 416 has retracted, and that's causing the prices that I mentioned earlier to go up, and will continue to cause prices to go up because I don't see inventory increasing in any kind of rapid way in the short term. The fourth theme that's emerging is what's happening at the high end of the marketplace. And by high end, I'm using $2 million plus as representing the high end. Over the last year, again since the implementation of the Ontario Fair Housing Plan measures, we've seen the high end retract, and it hasn't picked up any traction even in the month of May. For example, there were 233 properties reported sold that had a sale price of $2 million or more in the month of May. That compares to 427 in the month of May of 2017. So it's interesting because the high end hasn't picked up yet. Average prices, particularly in the 416, are coming up. So what we're seeing is a lot of properties selling in the $1.5 million to the $2 million range, but not that many that are selling beyond the $2 million. If we look at the prices in the 416, they're starting to become kind of pricey. A detached property in the 416 in the month of May would cost $1,426,000. A semi-detached property is now over $1 million as well, at $1,067,000. And even condominium apartments, which are the last affordable housing form in the 416 region, came in at $602,000. Ballpark on average coming in at about $1,000 a square foot. In the central core, they're actually higher than that, coming in at almost $670,000. So it would be interesting to see if before the year is out, the average sale price for a condominium apartment in the central core, where I might add the bulk of the sales take place, may approach over $700,000. The same is not true in the 905, as I pointed out earlier. Average sale price for a detached property in the 905 is $929,000. For a semi-detached house, $665,000. And for a condominium apartment, only $445,000. So you can see there's a major discrepancy in the two regions. The other numbers that I'd like to bring to your attention, and they relate to one of the themes that I said was emerging, and that is supply. In 2018, the number of new listings that came to market in May was 19,022 new listings, and that's for the entire GTA. In 2017, there was 25,764, so that's a decline of more than 25% year over year. So as we enter June, we're almost at the same point this year as we were last year in terms of available inventory. But as I mentioned, that inventory is not evenly spread between the 416 and the 905. The bulk of it is in the 905. In fact, more than 70% of the inventory is in the 905, and the remainder in the 416. That's why we're seeing upward pressure on prices. It's not uncommon for a well-priced property in a desirable neighborhood to see multiple offers, in some cases many multiple offers, again because of the demand and the inability of buyers to find the properties that they want. So those are the important themes that we need to be watching as we go forward. And I think what we will see as we go forward, as a final note, is we'll finally be able to do some year-over-year comparisons, which we weren't able to do in the past, because there was such a dramatic change between what happened in the first 4 to 5 months of last year and then the remainder of the year. We're almost through that, and the chart that I'm going to show you again is demonstrating that. The chart is starting to smooth out, and by the end of May, that chart will no longer reflect the unusual bar lines that we see for May last year compared to May this year. So we'll watch those themes: the shortage of supply, the increasing prices in the 416, the situation in the 905, see if it recovers. And we have had an election, and one of the indications in the election was that they may look at the foreign buyers tax. That might have an impact positively in the 905, and we'll see what happens as our final theme in terms of the high-end prices for properties. That is, properties that sell for $2 million or more. I think the stress testing on mortgage financing approvals is having an impact in that area, and hopefully it might work its way through as we get into a more regularized market. So I look forward to the next market report, which, as I said, I think for the first time in over a year, will be a market that will be able to compare this year to last year, and my belief is that that comparison will be a very favorable one. Thank you.